Rejoining me now is Jason Ware, is the Chief Investment Officer and Chief Economist at Albion Financial Group. Jason, now that we are open for trade and we see a little bit of buying in this market, albeit perhaps light volume given the holiday, do you expect that the Santa Claus rally will play out on Wall Street this year?
Yeah, good to be back with you. Just going off of probabilities here, right? Because we're talking about a very short period of time and anything can happen. I mean, clearly headlines are going to dictate which way we go. If we get positive headlines over the next few days, or maybe just no headlines, no news is good news kind of thing. I think Santa Claus rally can do its thing. If we get anything negative coming out of the incoming administration regarding tariffs, that could be a challenge. In terms of the economic data, it's fairly quiet between now and year end. So look, I mean, probability is, like you said, 73% chance that we see a positive Santa Claus rally. So I'm just going to go with that.
Yeah.
See what we get.
So it was interesting to see. We saw a rush of new money, $141 billion come into the U.S. equity market in the 4 weeks during November, according to global data. That was the strongest 4-week run that we had ever seen on record, again, according to the data. With money that's been on the sidelines, unsure of what the future might hold from an inflation standpoint, perhaps even a political standpoint, do you anticipate that there is more money to be put to work in this market as we head into 2025?
Yeah, I think the answer is unequivocally yes. If you look at the money that's sitting on the sidelines, as they call it, money market funds have continued to swell within the context of higher yields, right? We saw the Federal Reserve aggressively bring up short-term rates, and of course that flowed through to money market funds, and you were getting 5.25%, 5.5% just a couple of months ago, but that is still, a fairly high number. It's, 4.5-ish, a little less than 4.5% in money market funds. So there's still a lot of cash parked in those funds earning yield. And I think as, we get into 25 here, there's no reason to believe that money can't come out of area and look for bargains in the stock market, or just chase good stocks that are working.
So we've talked a lot about U.S. stocks. Obviously, you're bullish based on fundamentals ahead. What does that mean for bonds and even international equities?
Yeah, I'll work backwards. International equities continue to look attractive on both an absolute and relative value basis, but that hasn't been enough to get them off of the mat. They continue to struggle, just given the fact that if you look around the globe, the United States economy is really looking kind of, outside of things like India, where I think economic growth looks really strong and is accelerating. The U.S. has a pretty good balance of growth and inflation that's coming down and earnings that are going up. So, and of course, we have the most innovative companies, as evidenced by the Magnificent Seven. So that's been a cocktail for good returns in the U.S. But when you go across the pond to Europe, or if you go over to Asia, particularly China, there have been bigger struggles. And I think that's been represented in equity prices that haven't done so well despite that relative valuation. But I will say, final point on this, the ECB is likely to cut more than the Fed in 2025. So maybe if the economy holds up there and we get more cuts in Europe, maybe that's something that can help resuscitate stock returns there. Real quick on bonds, we still think bonds look good here on, as far as like a 60-40 portfolio. You can lock in yields in the corporate bond world that are, low fives. And I think that looks pretty good long term if you're an investor that needs bonds.
Interesting. So when it comes to the international space, Jason, what I'm gathering is developed markets might be more on your radar as opportunities in the new year than emerging markets. Is that right?
It's hard to paint with such broad strokes, right? Emerging markets, like I'm not bullish on China, but I think there are areas in the emerging markets that look interesting. But yeah, I mean, if you look at our portfolio, we have a small allocation toward developed markets overseas and very little in emerging markets. So I think that's fair.
Cryptocurrency? Is Bitcoin something you've been buying?
It's not. I mean, full disclosure, I own some personally, but as far as for our clients, that's not something that we have been proactive on for our client base. If clients are interested, we certainly we go down that path with them. But no, we are not proactive in crypto at Albion.
What else do our viewers need to know, Jason, as we head into the holidays and get ready to start a new year?
Well, first of all, enjoy the holidays. Don't obsess about the stock market when you're spending time with friends and family. But beyond that, just stay calm and keep investing. There's going to be volatility. It's not going to be up every single day. We're going to have periods of pullbacks and corrections, and that's a natural part of the experience in investing in equity markets. But as you take a bigger picture and kind of zoom out, the fundamentals still look good. And I think, if you own quality companies and are diversified and have the right asset allocation, then 2025 can be another good year for investors.
Long-term plan, goals, enjoy the holidays, all good things to take away. Jason Ware, thank you so much for joining us double duty today before and after the market opened. Jason's Chief Investment Officer and Chief Economist at Albion Financial Group.